Welcome to another episode of Lunch with the Shark. Join us as we dive deep into discussions about business, accounting, and finance to help you build a business that thrives. Now sit back and have a bite with your host, the Shark CFO, Vidal Espinosa.
Well, hello, good afternoon. Welcome to a new edition of Lunch with the Shark. I am your host, Vidal, the Shark CFO Espinosa, and it's great seeing you today on this Thursday afternoon. It's a little bit gloomy out there. The temperature here in our region has gone down, not significantly, but we're back into fall and winter. Last couple of days, not days, probably weeks, we haven't had a cool day. And today it's a little bit cold, it's chilly, and I think fall is coming upon our region. We're leaving the 72 to 76, 78 degrees in the region and to the 69, 71 degrees in the region. It's so funny because we're fortunate of living in this area, and the temperature does not fluctuate that much. Whenever it's chilly, it's like 69 degrees, and they're like, holy crap, I'm freezing my ass off, and we need a small jacket. We hardly use winter coats or scarves, gloves, beanies. This area is not for that. So maybe I hope you can relate to it, but if not, don't be envious, don't be jealous, and if you are, move over to the United States, move over to San Diego. You'll enjoy it. Oh, but the taxes are too much. Well, do some planning. I got yesterday the U.S. Tax Master Guide for 2021. It's a small book. Look, it's just it's very small. Yep. Let's see if it has a number of pages. It's only 944 pages, and look at the font. The font is like, I would say it's a 6, probably. So if you're trying to do your tax planning, call me and I'll send you one of these, and then I'll give you a week. I'll do it better. I'll give you to the end of January, and then we can sit down and discuss it. So maybe I can even employ you if you master this guide for your business. And if you can save yourself by doing it yourself as if it was a weekend project, over $25,000 in taxes, hey, I'll give you a job. How about that? So let's continue with this week's. They're laughing here at the office, and Jesus, I think he's laughing as well, because we were talking about the do-it-yourself analogy, and as you know, we actually sold our house and we're buying a new house, and we were like talking to our agent, and he was like, dude, come on. We sit down and watch $1 Million Listing, and what the fuck? You close the sale and the purchase of $1 million properties in just one drink. And it's taking us 8 months to close on our house that we're trying to purchase. What the hell? Also, in our remodel, like, dude, to the contractor, you should be able to close to remodel our home in 1 hour. 1 hour. Have you ever seen Flipping Brothers or Property Chingaderas or Las Vegas Flipping or stuff like that? They buy a house over the phone, same, and then they remodel their house in 2 weeks, 3 weeks tops, and even with drama involved. And fuck, we can't close in our house. It took us 9 months in our remodel. It's taking us 8 months to buy a house. Come on, really? It's the same thing when it comes to tax planning. It's not a weekend project. It's not like, oh, dear wife, let's paint our bedroom walls. Oh yeah, let's go to Home Depot or Lowe's or any store and let's buy some masking tape and some floor cover and 4 cans of paint and rollers and let's paint our walls. Yes, let's do our tax planning ourselves. It doesn't work, people, unless you really master the tax guide. And this is the tax guide, okay? This is not the tax code. This is not the tax code, the tax guide, okay? This is the interpretation to the tax code that we should apply for 2021. And this is one of the tax guides, okay? There's several. There's multiple ones that we get because maybe this is only for individuals. I just got it yesterday and haven't been able to glance at it or go over it. I'm pretty sure there's some corporate planning here and things like that, but it's part of it. Don't do it yourself. But I diverse from the topic from this episode, which is budgeting. How have you done so far with the last 3 episodes regarding budgeting? Have you enjoyed them? Have you done it? Are you starting to do it? What the hell are you doing? It should be part of your year-end process of planning. Yes, of planning. It's very interesting because I hear over and over, we are having our business, our office retreat this week, and we're going to do our planning for 2021. Cool. And what we do is we actually, any of our clients who tells us that, we send them the following questionnaire, which is 8 questions to ask to prepare a accurate and clear annual budget for your business. A solid company runs on a solid foundation. You don't need to be the head of a Fortune 500 company to treat your budget like it belongs to one of them. Planning for expected costs, comparing them to your forecasts, and then allowing some wiggle room for unexpected expenses. It's all part of budgeting game. Let's call it a game, because in reality, if we look at it in perspective, it is a game. It is like if I were playing cards or to the roulette or dices, whatever, craps. It's a game because we are predicting, we are projecting, we are hoping that our budget pans out through the year. The only way we'll know if it's panning out through the year, it's if we have numbers through the year, and it's only if we have historical numbers from previous year, and it's only if we are comparing the actual numbers as we incur on them through the year, through whatever we forecasted, through whatever we budgeted. Before you sit down to plan your business financials, ask yourself and your management team, which I really hope you have a management team, you have an executive team, you have a team of individuals that are advising, consulting, supporting you through your business. So the first question is, how much revenue is expected. Wow, I wish I have a crystal ball and I can really, really predict the future and tell you how much revenue it's expected. Unfortunately, there is no crystal ball for businesses to predict the actual revenue that will come in from one year to the next. But executives and finance experts can make some calculated guesses, forecast, predictions. Let's look at your past numbers, only in the revenue area, and identify your growth percentage year after year. Then look at the most recent. How did your sales look in your past 6 months? Are there some upcoming new products or services that will give revenue a boost in the coming years? With these things in mind, come up with a conservative, please, a conservative number for expected revenue and base the rest of your upcoming budget on it. Remember that I said, I don't know, I think I said it on Monday or Tuesday. 2020, it's a very special year for a lot of reasons, okay? And keep in mind, a lot of people are going to say, oh, this is a bad year. This is the worst year ever in history of humanity. This is the worst year for me. Whether it's the worst year for you or not, this is a very special year overall for human race, for humankind. That's why I highly advise you on, yes, utilizing your past numbers, but starting from zero. Take 2021 as the beginning of the new stage for your company. Utilize historical data. I'm saying 3 years, analyze them. Really analyze 2020, what happened, what could have happened, what was your planning for 2020, what did you use of your planning in 2020, and actually you're going to have to go back to the drawing board because 2021 is going to be very, very special year as well. And we need to read into the future. Second question you need to ask. What are the business expenses? Bringing in revenue, it's great, but you won't actually make money if your expenses surpass your income. Why does this happen? It happens because we have no control over our finances. It happens because we utilize our bank statement as our financial statements. It happens because we use our business account as our piggy bank. It happens because we have no control over what's coming in and what's going on. That's why this happens. Even if you tell me no, that's why it happens. Even businesses with many years of experience must frequently reevaluate their business expenses. It's best to hire a professional accountant or even auditing firm to look over your ingoing and outgoing expenses to give you a rundown of where your money is going. If you were to hire us as your accountants, you would be able to look at your numbers on a monthly or quarterly basis. We would be able to assess where your money is going. Why don't I have money? By us analyzing those numbers on a monthly basis or quarterly basis, I would be able to pinpoint and tell you, you know what? You're spending in this and 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 that it doesn't belong to your company. Oh, but my friend told me that I can actually run them through the company and make them deductible. Well, is your friend going to defend you if the IRS comes and audits you? I don't think. Or is your friend going to go to federal prison instead of you because they provided you that advice and you are following it? I don't think so. Or your friend is going to read your financial statements and tell you you're doing great, and you are just draining your bank account from your business. I understand it's your company, it's your business, but didn't you start your company and your business to generate wealth and not spend every single freaking dollar that comes into your bank account? I don't think it happens like that. I don't think you did that. Look back a few years and figure out what patterns are developing in order to best predict what those expenses will look like in the coming years. Really, really please identify every single expense that is associated with your company, with your business. Common operating expenses include costs to produce products, employee wages and benefits, rent, utilities, internet, web maintenance, office supplies, equipment. Those are the most important, or the common expenses that you need to be paying attention to. Now, a couple days ago, I think, I don't know if it was yesterday or the day before yesterday, I have a client. They're still a client. We love them. We adore them. But they call me and they said, we need to reduce all across the board 20% cost reductions. I said, cool. Let's cut your salaries. Oh, no. Our salaries are not. So in order for us to achieve a all across the board 20% reduction, then we're probably going to have to reduce some of your costs by 45% to achieve a total average of 20%. So let's start by cutting off, return your lease vehicle, then shut down your office, and so we can achieve the 20% cost reduction. Be objective, be realistic when it comes to cost reductions. Oh, let's eliminate your attorneys. And let's eliminate our service in this areas. So we're no longer going to advise for you. We're no longer going to do this. And then you're going to have to do your own tax return. Oh, no, that can't happen. Well, be realistic when it comes to cost reductions. Okay. Number 3, what does cash flow look like? Remember, cash flow is completely different than your budget. Cash management portion of your budget is important because it shows how much credit is available to extend to clients and customers before a potential liquidity problem will arise. Remember, most of you offer terms to your clients. Your sales, your revenue, it's not going to hit your bank account the same month as you invoice. It will happen a couple of months later, 1 month later, and so forth. But your bills are on a monthly basis on the month that you incur them. So be careful, okay? Be careful. No businesses are even want to run out of money to pay their operating expenses while still waiting to get paid from the buyers. This part of your business budget should break down spending into small segments, monthly or weekly. So at the end, everything matches. Every business has a different process of receiving and redistributing income. For example, a corporation may need to pay its utilities and employees before customers actually pay their invoices. Other business, like retailers, often have the necessity for cash to pay other bills up front. Maybe inventory. If you sell a product, you need to buy the inventory prior to selling it, right? So be very careful, okay? I recommend here a couple of things. And the first and foremost is that your accounts payable, which is whatever you owe, whatever you buy and you have to pay for, you only pay those invoices twice a month. you're not supposed to be paying them as you receive them, or like every single day cutting checks, or every single day paying invoices. No, have an internal control where you actually pay twice a month. That's it, no more. Okay, twice a month. That way, you can actually control how much monies you need, maybe on the 15th and on the 30th. And then you can aim to collect your accounts receivable, which is what you have sold to your clients. Number 4, are there any large projects on the horizon? What expenditures outside operational expenses are looming? Consider items like website redesign, rebranding, office remodeling, investing in technology, new product launch, which is research and development, travel expenses for conferences or new client meetings, looking for costs that are above and beyond what you spend day to day and month to month to keep your business running. Are you planning on a new marketing campaign? Budget for that. Consider that. Even if you're not, consider them, because if you're doing great, you're going to want to expand, and you need to consider that and use it. It's funny because we used to have a client, and from the get-go, I started telling them, hey, you need to go to seminars, study, to provide added value to your clients, because we need to learn. We need to prepare ourselves to be better for our clients. Oh, yes, 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 we're gonna do it. We're gonna do it. We're gonna do it. Well, for the 5 years that they were our clients, they never attended a seminar, a webinar, a updating in their industry whatsoever. Nothing. And their excuse, which is their belief, not ours, is that they had no time because they had to take care of the clients, and that they didn't budget it. Being me who I am, I would always go back to them and say, hey, dude, you know what? Well, if you were to reduce your travel and your meals expenses by 50%, you would be able to attend those seminars. Oh, no. But those meals are very important. Yeah, on a Sunday afternoon, you're not meeting clients on Sunday afternoon. If I notice that, guess what would happen? Any auditor from the IRS or the Franchise Tax Board from any state will notice that. So be careful. It's up to you where you want to invest or not. Number 5, what will next year and the years after look like? Maybe you don't have any out of the ordinary projects planned for the next year. But how about years after that? Instead of putting off planning for large projects until they are on your doorstep, start making that money in advance, right? Decide what you can feasibly save from your income this year and in the upcoming years, so you will help you predict when you can launch that large project. It's always best to look at least 3 to 5 years ahead. Remember, you started at your company not just to be in business for 12 months. And that's what we all do. Oh, I'm going to plan for 2021, and I'm doing my budget very nicely in a worksheet, and then I do multiple colors, and fuck that. Really? So you're telling me that you just want to be in business for just one more year? And let's pray to the gods that they allow me to be in business for 2022? Good for you. That's not my perception. That's not my vision. My vision is for a long-term business consulting firm. I think I mentioned this, and I heard this on a seminar, is that China, yes, the country, and mind you, again, you don't have to be a Fortune 500 to plan. China is not a Fortune 500, but they have multiple Fortune 500s in that list. They actually have a strategic plan for the next 1,000 years. They hope to be in business for the next 1,000 years. 1,000-year planning divided by decades, divided by centuries, decades, and then years. So imagine how focused they are to achieve that growth. If you had a plan for 5 years, let's say that you're starting your company and your kids are in high school, and your kids have already expressed the intention of being the same part of the company. Do you really want to plan just for 1 year? Let's add a couple of years. Let's say that they're in high school, they're going to a 5-year university, and let's at least plan for the next 10 years. Minimum, because it's your intention to leave that company to your kids, right? Number 6, is there enough of a buffet? Do you have enough cash to account for anything unpredictable? That's what we mean. There's no way to really put a number on what you will need money for as a business owner. There are just too many variables. But you should have a responsible amount put away for any emergency. Mistakes in production or damage control could arise. Set a goal based on how much money you want in this fund and then build for a few years to get there. Obviously, you don't need to get your nest of $10 million in the next year. If you can do it, amazing. But plan it out. Number 7, where should I spend more money? If your finances and upcoming budgets look sound, decide if there are spots where you could spend a little bit more. It is time to hire another employee or two, or perhaps a contractor. Maybe your online marketing budget could use a little bump. Make a list of areas where you think more spending will ultimately help your business earn more, and then prioritize them based on what you can realistically afford. Remember that you don't need to spend just to spend. However, if you can identify operational areas that could benefit from higher budget of their own, there's a potential to elevate your revenue. Research and development. Research and development. Number 8, where can expenses get caught? Once you know your current spending, that is right. Current spending equals to your current profit and loss. But remember, fudge your numbers. You're just supposed to know a couple of numbers. We are supposed to know all your numbers. We are supposed to give you those numbers as you ask us. Yes, that's what we're supposed to do. So once you know your current spending, where you plan to spend more, and what is on the horizon as far as large expenses go, it's time to reason where your money is going. Remember that small savings really add up. Revisit your utility bills, rental agreements, and vendor contracts. Are there any places to reduce services or ask for a loyal discount? taking just a few hours to look over spending and devise some ways to cut back has the potential to save you a lot in the long run. If this former clients would have followed my advice of at least cutting 50% their meals, I'm pretty sure, and this is with actual data, they could have made at least $50,000 more a year in profits. They actually had a competition among themselves to see who spent the most money on a monthly basis. That was so stupid on their part. And I actually told them. Once I told them, they stopped. They backtracked it a little bit, but they stopped because they realized that. Another client of ours, I asked them, hey, dude, how much money did you save in, let's say, 2018? Oh, we saved $20,000. And I said, wow, $20,000. Good for you. But $20,000 is commendable. Pat in the back. Did you know that your profit in your company was $200,000? What? Yeah, $200,000. Where's the other money? Where's the $200,000? Do you know that you spent $24,000 in Nordstrom's? Do you know that you spend this much in any other store? Do you know that you spend $180,000 in personal shit through your company? I didn't know. Yeah. Do you know that you could have saved for that down payment for your house just in this year alone? Oh, yeah, but I way. Está cabrón. Just listen. If you would have listened to my advice, you could have put down a down payment of $200,000 towards that house that you guys want to buy. They were floored. They were shocked. Even though on a monthly basis, we were reading them their numbers, but it was going in from one side and coming out from the other. Annual budgets provide the framework for the financial decisions your business makes for the rest of the year. Create your budget and work alongside financial experts to ensure you haven't missed any important points along the way. With the right budget in place, you can help your business see continued growth year after year. Wow. If you want these 8 questions, send us an email, send us a message through Facebook, Instagram. I don't know if you can do it through YouTube or Spotify or even LinkedIn. And I will be more than happy to share them with you because this is going to help you just a little bit on that budgeting for the next, what? For the next 5 years, minimum. Okay? I was listening yesterday to radio, and there's a bank in Mexico called Banorte, and they were giving some very interesting statistics. And they were saying that every small, medium company in Mexico does not go further than 2 years in existence. 98% of small and medium businesses in Mexico don't go further than 2 years in existence. And out of 100% of the small mediums are considered micro businesses, 65% of them. Isn't it interesting how we start a business and they survive less than 2 years, 24 months? That's what, 2.5 pandemics? What's your excuse for failing on the first 2 years? You're not planning. You want to do everything on your own. Oh yes, because you have the you're gonna turn to me and say, oh, because you have everything and you have consultants and you have the means. No, I don't. Or maybe I do. But I have a focus. I have a mission. I have a vision. And it's not a mission that it's just bullshit with very nice words and very like elaborated. Fuck that vision and mission. Have a true vision. Have a true mission. Right? Let's end up today's show with a quote from somebody that didn't make it in life, somebody that was not a visionary, somebody that it was just like, oh, fuck this. Somebody called Henry Ford. Maybe you've heard of them. There's some cars running around, all cars running around there, right? He was a nobody. He said, pay attention to simple little things that most men neglect, make few men rich. Analyze this little phrase. It's full of meaning, and it actually pinpoints what I just said. Paying attention to simple little things that most men neglect makes a few men rich. Henry Ford. It's been great seeing you. See you tomorrow. Bon appetit. Ciao.
Thank you for listening to Lunch with the Shark. If you would like to set up a consultation with the Shark CFO, Vidal Espinosa, visit his website www.invictus-advisors.com and don't forget to subscribe on Facebook, Instagram, YouTube, Twitter, and LinkedIn.